So, yeah. So it's streaming on Facebook, on Twitter, on LinkedIn, and on YouTube. Fantastic. Okay. So for those who are joining us for the first time, welcome HTJ.tax. Member Moore's Rule in Asia Pacific. So we're gonna have our Moore's Rolling colleagues in the Philippines join us for what I'm sure will be a very interesting conversation about international taxes international taxes in general when it comes to the Philippines, but a US Philippines perspective in particular, trying to demystify this sometimes confusing world. There's so much misunderstandings out there. So I'm hoping that we'll inject a healthy dose of sanity into an otherwise quite interesting conversation nonetheless. So yes, this is being recorded. So if you don't want your image to be reflected in the recorded video, all you need to do is keep your camera switched off. We do have allowance for Q&A at the end. So we have some questions that we're going to kind of talk through. And if you'd like, just feel free to key your questions in the box below if you're on Zoom, or one of the other chat boxes if you're in one of the other platforms as this is being live streamed into. So without any further ado, I'll introduce Myra and Ali. Myra, Ali, would you like to introduce yourselves, please?
Hi, good evening, good afternoon, everyone. So
Hey.
I'm Aleli, one of tax partner from SCP or Season Correlio Parani and Company. So I have with me Ms. Myra Oliva, our partner also on tax.
Good evening, everyone.
Okay, all right, short and sweet. Yeah, we like that. All right, so let's jump in. So, there's some questions that I think that when I'm speaking with clients, it just pops up all the time. So I just thought I'll just throw those in. The first thing is the tax system in the Philippines. Is it territorial or not? Where does it sit? Is it worldwide tax or is it territorial tax? I'm sure it's somewhere in between, but could you use that as a jump off point to kind of educate us as to how it works? Either view is fine.
Yes, I'll be discussing the registration, investment, and taxation of foreign individuals and corporations. Okay.
Right. So is it territorial tax or worldwide tax?
For the Filipinos, those who are resident and citizens of the Philippines are taxed worldwide. But if you are not a resident, if you are just a resident of the Philippines, but you are not a citizen, or you are called an alien. So a foreigner, in simple terms, you are taxed only within the sources, or with all your earnings in the Philippines only. So that is the difference between the two types of income earners. So for you
Okay.
to be taxed worldwide, you need to be a resident and a citizen of the Philippines.
Okay, fantastic. So just to be clear, there's similar terminology in the Philippines that is used in the US, of course, I guess because of the history. So there's a concept of an alien, there's a concept of resident alien, non-resident alien, and so on, right? So if someone is a citizen of the Philippines, as you said, I'm just making sure that I got it correct, and they're based in the Philippines, they will be taxed on their worldwide income. However, if someone is resident in the Philippines, but they are not a citizen, they're taxed on the income only arising from within the Philippines. The foreign source income is generally speaking untouched. Am I correct in saying that?
Yes.
Okay. So this leads me to my second question. The concept of a place of effective management, or in some jurisdictions have been known as nexus, or if you're talking about tax treaties, the idea of a permanent establishment. So let's say that someone has a company set up in, let's say in the US, or it can be Singapore, Hong Kong, whatever. So they have a company set up elsewhere outside of the Philippines. and they run that company from within the Philippines. So, it doesn't matter where the income is collected, whether it's into a Filipino bank account or into a Hong Kong bank account. The point is that they're running that company from within the Philippines. My question is that company subject, generally speaking, of course, there'll be nuances, but generally speaking, is that company subject to taxes by the BIR?
So the company is situated here in the Philippines, am I right?
No, so that's the thing, that
Oh
this
no,
is a common thing so the company is
it's situated
incorporated,
outside.
it's incorporated elsewhere, but they're running it, the team that's running it is sitting in Manila.
Oh, so there is a team that is running the business here in the Philippines. So I think there is what we call permanent establishment, that whenever the uh, foreign company operates here in the Philippines by
Mhm.
either employees or
Mhm.
office, so that is considered a permanent establishment, which made them taxable and liable here in the Philippines.
Absolutely. You don't, I mean, this comes up all the time. I actually had this guy got upset with me. I'm sure he's not listening because he's upset with me. So he incorporated a company in both Hong Kong and I think it was in Taiwan, but his main thing was in Hong Kong. And he flew in, this was during COVID, he flew into the Philippines and he's running this company from the Philippines. He didn't leave. And I said, he came in for a consult and I said, hey, you're running your company from the Philippines. Chances are, I mean, I know we can get into a further conversation about who's going to find out and how they're going to know, but just being completely honest and following the law, if it is you're running that company from the Philippines, you need to have a conversation with the BIR. And he got upset with me, but you absolutely. I'm glad that you're echoing those sentiments. It is commonly misunderstood. People seem to think that just by the mere act of incorporating a company somewhere else in Timbuktu in the Cook Islands or whatever, that they can go somewhere else and then be completely tax free. So I'm glad we clarified that. Another issue that comes up pretty often are retirements, people who retire in the Philippines. So they live off foreign pensions, whether it be pensions from the US, pensions from Australia, pensions from the UK. I think you kind of answered that when you responded to the first point, just to kind of make sure it's crystal clear. Would the foreign pensions be subject to tax when they're received by the retiree in the Philippines?
Sorry, question. Can you repeat the question?
Sure, no problem at all. So someone has retired and they're on one of the visas that allow them to live in the Philippines. So their retirement visa. They're still receiving a pension from Australia or from the US or from the UK. And it's being paid into their Filipino bank account from, the foreign financial institution. When they receive that pension in the Philippines, is that pension free of tax to the Philippines?
So, for the retirement, I think whatever they earn, the law is clear that whatever they earn here in the Philippines,
Mhm.
but if it is coming from the other countries, I don't think that it would be taxable here also.
Okay, absolutely. And this is consistent with, what we also hear from other credible sources that retirement, again, once it's not arising from within the Philippines and it's arising from outside, and of course, that person, you have to assume that person did not take Filipino citizenship, and because that may make it a bit more complicated. But let's assume that they're just here on a visa, they're a long-term resident, that pension should be free of tax. Okay, wonderful. Another question. Of course, people move to the Philippines and some of them might be quite entrepreneurial, right? And they see a business opportunity in the Philippines. Generally speaking, can a foreigner form a company in the Philippines?
Aleli, can you? answer. I think Miss Aleli has prepared a deck.
Okay.
Can she
Okay,
present
sure.
that to you?
Absolutely. Let me just
Okay, thank
share
you.
screen. Go for it. Dazzle us.
Yeah. Yes, Darren, can you repeat the question, please?
I was asking about foreigners coming to the Philippines. Are they legally able to form a company in the Philippines?
Yes, it can be a one-person corporation or
Yes.
the four types of foreign corporation, the representative office,
Yes. Okay.
um,
Yes. So could you, okay,
representative,
so go ahead. I'm sorry, you finish.
yes, the representative office or the branch office, regional operating headquarters, or the regional area headquarters.
Okay, great. And especially that one person company is a relatively new development in the Philippines, right? Before
Yes,
that,
I will discuss
yeah.
it later.
Oh yeah, could you talk us through the process of forming a company then as we're on it?
Yes.
Let's assume I know there are a lot of options. Let's stick with the one person company. Could you walk us through what does that involve, please?
Um, One person corporation actually is
Can you show the deck,
applicable.
Miss Lay? Sorry. Could you
Yes,
show
yes,
them
yes.
what you have prepared earlier?
Okay, wait.
Thank you.
Okay, yeah, see it.
Is it visible now?
Yes, it's already visible.
Yeah, we can see it here.
Okay. For yeah. One person corporation is a business entity with just one stockholders. The single stockholder is also a director and a president of the company. So for the foreign corporations, we have branch office, representative office, and regional operating headquarters. So one person corporation, as mentioned earlier, has a single stockholder or sole director and president. So within 15 days from the issuance of certificate of incorporation, the treasurer, corporate secretary, and other officers must be appointed. And the nominee and alternate nominee can take over the management as a director or president upon death or incapacity of stockholders. Who can form an OPC or one-person corporation? It's a natural person or uh, foreign foreigners who wanted to invest in the Philippines with limitations in areas of investment is partially or completely restricted from foreign involvement as are specified in the foreign investment negative list. So who cannot form or allowed to form an OPC? These are bank, non-bank financial institution, quasi-bank, pre-need, trust, insurance companies, publicly listed companies, non-chartered government-owned controlled corporation, a natural person licensed to exercise a profession for purposes of exercising his profession. So what are the other features of an OPC or one-person corporation? It has a limited liability of debts and obligation. Any personal or external asset is separate from the entity. The corporations are allowed to perpetually exist and no minimum capital requirements. So the other documents required to register are articles of incorporations, written consent from the nominee and alternate nominee. Other requirements are proof of authority to act on behalf of the trust or estate, Foreign Investment Act application form, affidavit of undertaking to change company name, and tax identification number for Filipino single stockholder, and tax identification number or passport number for foreign stockholder. So for foreign corporations, we have branch office. Branch office are foreign carries out the business activities of the head office and derives income from the host country. While the representative office handles activities not limited to information dissemination and promotion of the company's product as well as quality control of product. Also deals directly with the clients of the parent company but does not derive income from the host country. For the regional operating headquarters, is a foreign business entity allowed to derive income in the Philippines by performing qualifying service to the affiliates, subsidiaries, or branch in the Philippines, in the Asia-Pacific region, or other foreign markets. For the regional or area headquarters, is act as an administrative branch of a multinational company engaged in international trade, which principally serve as a supervision, communication, and coordination center for each subsidiary branches or affiliates in Asia Pacific region and other foreign markets. And it does not derive income in the Philippines. So the ways to register in Securities and Exchange Commission is they are open for online filing or online registration with minimum requirements of proposed business name, articles of incorporation. Depending on the requirements for registration fees, depending on the capital contribution. So the application for licensing of foreign corporation are exempted in the uploading of documents process, but the submission of 4 sets of required documents to the selected SEC processing office will be done within 30 calendar days from the date of payment of processing fee. So once the application is approved, the SEC will issue certificate of incorporation.
Okay. So okay. As we were saying at the beginning, this whole idea of a one-person company is a huge step forward for the Philippines in terms of ease of doing business, because before that you'd need like 4 or 5 shareholders / directors, and it was quite cumbersome. I would imagine, even though the picture that you paint makes you think that it's quite a smooth process, I would imagine that anything to do with the SEC and the BIR tends to be what's the right word to use? It tends to be challenging sometimes. So I would imagine that you would still benefit from using a local advisory team like yourself rather than someone trying to figure it out on their own. Am I correct in saying that?
Yes.
Yeah, okay, cool. And basically, of course, it all depends on what the person's trying to do, whatever. But generally speaking, how much would the cost of incorporating a one-person company be if it is you guys are helping a client with the process? Generally speaking, I know it can vary.
Oh, well, generally, we offer services at the minimum price of at least 25 to 30,000 to set up a business here in the Philippines. So that is from end to end.
Okay, all right, that's great. So between 20 and 30,000 pesos. And of course, the rules are very specific as to what sorts of activities a foreigner is allowed to engage in, a foreign-owned company is allowed to engage in, as opposed to a local company, in terms of licensing requirements and so on. They're very, very particular. Am I correct in saying that as well?
Same with other foreign entities or corporations. They are also limited as
Yeah.
to what kind of industry they are allowed to put put up.
Right. And could you say a few words while we're on the idea of a company? Could you say a few words on the PESA regime? Not too much detail, because I know that's like a huge thing on its own. But just basically, what is it about?
I'm sorry.
Could you say a few words about the PESA regime?
PESA, Miss Lay.
Yeah.
For the PESA entity, they are exempt and or they may required to register or apply for zero rating certification.
Okay, so generally speaking, the Philippines has created certain special economic zones that allow 100% foreign ownership of companies. And typically, of course, there are exceptions and, there's a lot of variation to it. But typically, these will be companies that are focused on export. So not necessarily making money from within the Philippines, but using the Philippines as a base to export some sort of product. And so as a result of that, they may get certain incentives which may include tax breaks. Is that a fair synopsis summary of it?
Yes.
Okay. Is that something that your firm gets involved in, or not really?
Not yet.
No. Okay. All right. Fair enough. Another question. FATCA. FATCA and CRS. So these are two frameworks for information exchange. One is the Foreign Accounts Tax Compliance Act, which means that financial institutions in the Philippines would report the activity of either individuals in the Philippines that have banking or financial, not just banks, but brokerage accounts or maybe some big insurance policies, the investment funds or whatever. If it is they believe the owner or the manager of the account is US exposed, so they either have a US passport or green card, the banks, the BDO, Bank in the Philippine Islands or whatever, they're obligated to report that to the, I can probably just stop the share screen. Yeah. So let's go back to, let's go to the whiteboard and then stop share. Okay, right. So under FATCA, they're required to report the activity of anyone in the Philippines who's doing some sort of financial activity, and the person is US exposed. So that's that. And the Philippines has signed an agreement with the United States that facilitates that exchange of information. Now, there's another one called the CRS, which is similar in that the Common Reporting Standard is another framework for exchange, where it's multilateral, where the Philippines or other nations around Asia, so for example, Singapore or Indonesia, or whatever, so Malaysia, they've signed, Vietnam, they've signed these arrangements where if an account in a financial institution is owned or managed by a foreigner, let's say it's someone from Australia, the bank or through the tax office would share those records with Australia or New Zealand or the UK or whatever. But my understanding is that the Philippines has not signed CRS. Can you comment on that? Is that something you're aware of? No?
We're not 100%. I don't know 100% about the FATCA and the agreement between the US and the Philippines. But as far as I know, the Philippines is still um, uh, um, holding on to the Data Privacy Act. So I'm not sure what is the extent of the disclosure is being done by banks to US. So I'm not sure yet.
Yeah, so I think that one, so the one with the US is fine in that the Philippines did agree, and of course, because of the historical relationship with the United States, it was kind of like one of the early adopters that the Philippines had does share information with the US. So I think the question was about the other one, which is based on the FATCA arrangement, which is called the Common Reporting Standard or the Automatic Exchange of Information. So that one is just like the FATCA is an exchange of information with the US. The CRS or the Automatic Exchange of Information is the rest of the world. So I was just curious as to whether there's been any discussion. So when I last checked, I think last year, I think the Philippines was, well, the year before, sometime during COVID. I don't think the Philippines was involved, but yeah, I would imagine that that situation is probably unchanged. As you pointed out, the Philippines does hold fast to its financial secrecy rules, and as at this point in time, they decided not to proceed in that. Okay, another question is around control foreign corp. And I think we've had this conversation previously with regards to another client. The idea that in other jurisdictions, so let's say Australia or Japan or the US, of course, Europe, there are rules around control foreign corp. So like if there's a Filipino company and they have a subsidiary in, let's say, Singapore or Malaysia or something like that. If it in some other jurisdiction, so let's say it were an Australian company and they had a subsidiary in Singapore, a fully owned subsidiary, because that's deemed to be a controlled foreign corp, therefore the tax office in Australia may have something to say about the taxability of what happens in Singapore, even though it's a separate company. Same with Indonesia. So if an Indonesian company has a subsidiary in Malaysia or Singapore, the subsidiary, even though it's a separate legal entity in law, may have some tax responsibilities back to Indonesia. As far as we're aware, there are no CFC or no control foreign corp rules for Filipino companies that have subsidiaries elsewhere. Am I correct in saying that?
As far as I know, yes, you are correct. I have based on the tax laws, I haven't
Mhm.
um, encountered corporations being or affiliates or subsidiaries of Philippine companies outside the Philippines are being taxed um, together or here in the Philippines. The income earned by those um, companies outside the Philippines were not being taxed here in the Philippines.
Okay, fantastic. Another relatively new development, at least in the greater scheme of things, has been transfer pricing. So even though there may not be any CFC rules, if there are related party transactions, so let's say a Filipino company has a related entity, related being common ownership, for example, with a company in, let's say, Hong Kong or Singapore, especially in a lower tax jurisdiction, the BIR is now insisting on transfer pricing documentation. Without going, it's quite complex sometimes, but do you want to comment on just very, very a high level on how that works with the Philippines, the BIR?
Last 2013, the BIR has released regulation about transfer pricing guidelines, and then a few years back, it has been revived and it has been implemented, uh, mandating taxpayers to report
Mhm.
or submit a form or BIR form or return indicating their uh, relationship, foreign or local relationship, in the Philippines, and then it was later revised to certain companies with a particular threshold. So it has been implemented since Ms. Lake, can you help on the detail?
Since 2019, the related party transactions disclosed on the financial statement, audited financial statement, and also are required to submit BIR form to declare the related party transaction.
And as you pointed out, there's thresholds involved. So I think the thresholds are pretty high, like 150 million pesos and 19 million pesos. So in US dollars, this is way over like $1.5–3 million. So it is, for the larger companies and doesn't really impact SMEs. Is there a fair statement? Yeah.
Yes. Actually, the primary required for the declaration of the related party transactions are included the large taxpayer and other registered to the Bureau of Investment.
Okay, gotcha. Okay. And so last question in terms of what I had prepared about BIR enforcement, like there's certain tax offices that tend to be more aggressive than others. So like in South Asia, when people think of like a really aggressive tax offices, I think everybody thinks about India because they do some quite interesting things. Also, Indonesia can be quite aggressive. In the greater scheme of things, what is your experience with enforcement from the BIR? Are they pretty aggressive? Do they welcome negotiation? Are they reasonable when you approach them with certain things? Do they play hardball, take things to court? What is your experience? What is your general perspective?
Well, generally, BIR is aggressive.
Okay.
Especially nowadays. But some of our dealings with them, there are some, like for example, during an assessment or audit, some of the findings are refutable. They are up for negotiation as long as there are full documentation available. So as long as there are full support, invoices, ORs, contracts, etc., then everything else will be refutable and will be negotiable. So, but they are aggressive.
So you're saying that it's super important. Yes, they're really aggressive now because, of course, like most countries in the world, especially post the pandemic, money is an important issue. There are holes in balance sheets to be plugged. So I think everybody's picked up the pace. So you're saying like it's very important now to make sure you have your official receipts, you have your contract, you engage in proper record keeping.
Yes,
In order
yes.
to be able to answer questions as quickly and as accurately as possible.
Yes, compliance is always important here in the Philippines. So that's one of the things that one was who wanted to establish or set up a business here in the Philippines must consider full compliance with the tax rules and regulations.
Okay. And what about, the people who come to Philippines has traditionally attracted people who would describe themselves as digital nomads. So these are people who are basically freelancers. So they're able to work independently. They may not even be employees to any company. They're just maybe independent contractors. They get like a short project to do. They do the project, they hand it over, and that's it. So, and you see a lot of them. Well, at least I haven't really been back and moved around since since the pandemic, but before the pandemic, you had all these co-working spaces in Manila and Cebu, and you go in and you see people from all over the world doing projects for clients from all over the world as well. So if someone is spending a lot of time in the Philippines, so that let's say they spend more than 183 days, so they may be considered tax resident, and they are freelancers, but they are working from these co-working spaces, they're working from, you know, their Airbnb or you know, whatever accommodation they may have in the Philippines. Would they be taxable in theory on that income? Should they be considering paying taxes to the Philippines on that income? And if so, how would they go about registering themselves as freelancers and independent contractors?
As to the co-working spaces, I'm not sure if there is a specific ruling if the co-working spaces would be considered as a foreign uh, establishment or what. But at least at the minimum, the any resident or any alien or any foreigners who work here in the Philippines for more than 180 days is required or is considered already engaged in business and
Mhm.
here in the Philippines and is required to file tax returns and pay the dues or pay the tax dues that is uh, based on the income he or she earned here in the Philippines.
Mhm.
So, of course, uh, he or she still needs to register
Mhm.
as a business here or as a professional here in the Philippines. So that is a little tricky as some of the professionals do not really stay here for long or they may have stayed here for more than 180 days but they are not usually here for a year. So
Mm.
that's one tricky thing that is still I think it's a gray area. But if we will follow the rules, so strictly speaking, then uh, the foreign national who is engaged in trade or business here in the Philippines must file an income tax return
Mhm.
here in the
Mhm.
Philippines.
Mm. Okay. Yeah, and it is the same for most of the jurisdictions across Southeast Asia. Yes, you may have a visa that allows you to stay, and therefore you may, and you know, actually be tax resident according to the rules because you've done the time. But then if you say, hey, I want to do the right thing, I am working remotely from this country, so I want to register and pay my fair share. The process for doing that can be, as you said, quite challenging and it's not very straightforward at all. Okay. But I want to go back to another point you raised previously that you said that the BR is becoming more aggressive. So are you seeing more of a specific type of enforcement action? And what specifically are they looking at now that they perhaps didn't pay that much attention before? Or is it just everything? They're looking at everything. Or are they like focusing on, let's say, the top three things that they seem to be more sensitive about right now than they were previously?
Well, I guess it's still corporations. They are still focused
Hmm.
on corporations, and then as to professionals, they are being encouraged by the VIR to comply with the tax rules and regulations. But I think for most of the professionals or um, sole proprietors who had been on their threshold for audit, um, well, those who are high income earning individuals, they're one of those uh, audit targets by the BRR. But for the small freelancers, I don't think the BRR has yet um, focused on them.
It's all about corporations right now. Okay.
Yeah.
Understood, understood. Okay, okay. So I've just had a quick look and I'm not seeing any more questions. So on that note, if someone wanted to get in touch with you and your team, they want to set up a company in the Philippines, they want to find out more about taxes in the Philippines, what's the best way for them to reach you guys?
Um, they can reach us through our website.
Mhm.
They can search it sap-ph.com. We have a certain portion there for inquiries.
Mhm.
They can send their inquiries there, or they can email us. Or our office is located at um, uh, Philippine. Oh no, it's already Tactile Towers in Ortigas,
Mhm.
20th floor in Ortigas, and can be most of us are already on hybrid, so
Mhm.
they can reach us through email or
Mhm.
mobile number.
Mhm. Okay, that's great. So just to repeat, scp.ph.com, scp-ph.com. Okay, wonderful. Myra, Aleli, thank you so much for sharing your time and sharing your expertise with not just those who are uh, watching this wherever they may be, but those who would watch the recording afterwards, because we're going to record this and it's going to be uploaded on probably about 25 podcast platforms. So wherever someone will get their favorite podcasts, iTunes, Spotify, Google Play, Amazon, SoundCloud, just basically everywhere.
So that's
So sure, so you guys will be internet famous soon. Thank you for your time. Have a good evening and see you next time.
for having us here there.
Thank you.
Yeah. Bye bye.
Bye-bye.